What is going on, guys? Chris here, and welcome back to another video. Today we're going to be covering the action on NQ for July 27th, Thursday. So we took a total of 9 trades today, one of which we lost. We'll cover that one as well. All these arrows represent our entries and exits today. You can see we took a lot more trades than usual. I took about double the amount of trades that I typically take. And the first trade that we took was a long over here, but I just want to explain the levels that I sent out this morning. So I sent out some NQ levels, and we know that yesterday they raised rates by 25 basis points. So what I said is I currently don't see anything too appealing for a trade, but I do think we see a sell-off in the afternoon. And I don't really want to take credit for the sell-off, actually. I'd rather not, because this is due to news with the T-bills and the interest rate hikes, or the interest rates affecting that. So we at 8:50 Pacific, so 11:50 Eastern, we're watching for longs, and we're about to cover this trade and how we took an NQ long at 15,800. So, and then we managed to get over 50 points in that. But that's the only trade I alerted today. Everything else was in voice, so just keep that in mind. So the trade that we entered was right here at 11:50 Eastern. And the reason for this trade is due to multiple things. So first of all, we had this fair value gap here on the 1 minute, which I saw us bounce off of here. And now we have a secondary test. The risk reward is quite nice because we can either have a stop loss below this little wick here, which was actually my original stop loss before I moved it down a little bit. And then we can have a stop loss below here, or we can have a stop loss below here. So all these levels are valid for stop losses. Obviously in this case, you can see we would have got stopped if we had our stop loss just right there. I typically like to go a little bit riskier. So I had my stop at this level after I moved it from here to here. And then, our risk reward is along right there. Oh my God, can this work? Along right here off the FEG, 25 point stop loss. And then for take profit, we have about 45 points. And I actually exited the trade a tad bit early. You'll see if I pull up the fills in a second. So that was this trade. We're just taking a 1 minute FEG off of this break of structure to the upside. And I take this FEG rather than this FEG or this FEG or this small one up here. I take this one instead of any of those because it's the FEG prior to us breaking above these little highs here and prior to us obviously hitting this liquidity on this run. So that's why we entered there on that FEG. And if we go down to the 5-minute chart as well, scroll back here, we do have a 5-minute FEG, and you can see that we almost close above on this candle, and on this candle we have a nice wick. So that's the reason that I'm holding in through here, and I'm expecting us to still grab liquidity above these highs. Again, it's just a bias. Liquidity above these highs in order to dump lower in the afternoon. Again, news did affect that, entire trade and the rest of the afternoon, so I'm not really going to take credit for it, but just saying that was the overall bias that we had. I'll just pull up the fills real quick. So this was the fill for long, and then it exited all right here. So you can see 2 NQ here, 2 NQ as an exit right there. That was just the fills on that exact trade. And then we also took another long position here because I got kind of upset that I didn't hold until full TP. So I saw that now we're breaking out again, might as well just enter once more. So I entered on more NQ, and let me pull up the fills on that. So you can see right here, we got longs here, and then 2 minutes later just exited on that position at this high. So that was a nice trade. Very, very good. We had 2 longs in the morning, so already starting 2 for 2 in the day. Now the next trade we took in the afternoon session, because I was a little bit wary after we had this tank. Basically after the news, we had broken all of these lows, and so there wasn't too much more liquidity to draw to other than our London session low, which is right in here at about the 710 level, 710.5 to be exact. We have this other overnight low over here at 700, but that's not super important. What we're also looking for are these FOMC highs. So FOMC high is exactly at 710, so it's exactly the London sell side. And we have this other FOMC high at 683. And the overall lows, and I'm thinking in the back of my head, the overall lows, and we're going to cover it in a sec, is this FOMC low, these 2 lows here. So prior to FOMC, we bought them at 15, so 515. And then before, or actually during FOMC, we bought them at 520. So those are the 2 levels I'm watching for. If we get even close whatsoever to those, I'm looking for shorts. Now, I took a bit of a long here because I was kind of expecting us to have a bounce out of this range and I was expecting us to grab liquidity above this high or even this wick here, and I just might as well long. I was at the bottom of this candle, so it was actually a really good fill here at about 11.5. We had great profits up to 24, so already about 50% or 24 points. We did not take a profit though, and we ended up reversing our position on this candle. So about halfway through this candle, we had a stop loss right here at the low day. What we did is, instead of waiting for a stop to hit, I said, honestly, it doesn't look like it's going to be going for liquidity anymore. It doesn't look like it needs more liquidity. It looks like it's just going to be consolidating and then breaking out of that consolidation. So once we saw this candle approaching the low, we knew that there's almost 0% chance really that we're going to just randomly wick before going in a new low day. So we just reversed our position. We doubled the amount that we were in with our long, and we went short with that. So we instantly exited and instantly filled for shorts. And I believe I don't know our exact fill, but you can see on the chart here what we did. So it doesn't show 2 arrows because it was just one order. We just had double the amount of longs that we had on short. We shorted here, and then we exited here, and then we shorted once again here. We didn't really catch the entire trend, as you can see. We just caught small portions of it. But fills was about 10, and then we already exited down here at 80, which was about 30 points in 2 minutes. So we were completely fine with that. And then we re-entered our shorts here and here just for more downside. And we're also targeting this 50% breakaway Thursday FEG, which is such a random sort of level. But basically the Thursday FEG on the 5-minute from last Thursday, we had this fat FEG that broke away from a consolidation similar to this candle right here. And that's a little level we were targeting for a bounce, because it's been respecting it very nicely for some reason on like a 5-minute or 15-minute basis during regular market hours. So something we were looking for, and we just took another short again right there. And then we took profit ahead of the bounce. As you can see, we had our fills right there. So that's what we did for that trade. And then we're moving pretty quickly through these because they're just all shorts. We shorted once again here, so we're looking for expansion again to the downside. We could have obviously held our original short from all the way over here. That would have been great. In retrospect, we could have just held that. And we ended up shorting once again here on this green candle, as we thought that sellers were going to basically just come back in, which they did. It was kind of difficult to lose on a trade if you were short during this rundown, unless you traded, I guess, near the close. But we'll pull up the fills once again. All we did, or wait, it's not on this one. Whoops, it's right here. So all we did was short once again here, and then short once again over here, and then we exited on this candle. I just had a fat sell stop order below this consolidation on this green candle, which I'll show on the regular chart, just below this green candle for further downside. So I had a fat sell stop, which I was going to get filled for more shorts on. It was at 98, and then we just filled down here at about 82, 83 on our positions for buy, so buying back into the market. And then we're fully out of our shorts at that point. The next trade that we took was a long, and the reason for that is actually something very different from what you'll typically see. And it's something ICT teaches, and it's basically taking the 2 and the 3 on the Fibonacci. So what I did is, ahead of this downside move, I drew this fib right here. It takes this low to this high. I'm pretty sure this is what the range I took. Let me just make sure. Yeah, so this is the range I took. So this is the move that occurs ahead of the sell-off that we're seeing, right? So I took the low here and this high here, which it drew on liquidity here, here, and here. So it drew on the buy side liquidity 3 times, or 4 times, I guess, but 3 main times. And that's when we had our sell-off. Right here was also a reason for that long that we talked about earlier, was at the 2 levels. So a very, very possible area for a bounce and to draw more liquidity above these little highs. We end up obviously not bouncing too much, which is why we took the loss in that trade. But we go to the 4 levels. The 4 levels is like a very, very large overextension. It's a very, very high probability target for them to reverse. And I was looking for a bit of a bounce as well, ahead of hitting this FOMC low, and then the mid FOMC low. So during FOMC we hit the low at 520, and then prior to FOMC we hit the low at 515. So those are the 2 lows I was looking for, and still looking for short opportunities. But I'm thinking that ahead of that, we're going to see a bit of a rally in order to gain liquidity to the upside. So they're going to try to take out a buy side liquidity. That's exactly what they did. So we took this long here. The conditions are we're at the 4 level. Took the long here. I'm going to say our fill is 64. Goes a little bit down to 40, and then eventually hits our TP at 12. So this is a great trade because our risk is basically stop loss right there at the low at 43. And then our TP is 50 points, which is, I guess, 100%, you could say. So our risk reward is 1.16. So that was that long. And then again, the fills are just right here. We took profit about one candle early, and I just wanted to make sure we locked it in case we see a big ass wick and we don't get filled for whatever reason. I'd rather just take my profit 2 points early than risk, a fat 10-point candle rejection, just in case. So that was our entry for long, and then our exit from the long. So that's it for that specific account on the fills, because we were trading across like 3 or 4 accounts today. And then the last trade of the day was at this white candle right here. Now this is something that I was talking about in voice chat, and so if anyone who is in voice chat and is now watching this video will definitely understand this more than anyone else. But what you want to watch for when you're nearing FEGs is what the reaction is on the candle by candle basis. So let's just go to, and you guys are going to find this a little bit weird, but I want to focus on this trade since it was really an easy trade, honestly, at the end of the day, and how you can, bag profits a lot more quickly and very easily. I'm going down to the 15-second chart. A lot of you guys are going to say, what the hell are you doing? Such a low time frame. Like, what are you doing, Chris? Now, I want you guys to focus on this consolidation level here, as well as this FEG on the 1 minute over here. So now this is a 1 minute FEG. If we go to NQ on the 1 minute down here, you're going to see it's a 1 minute FEG, and then we have the consolidation. So just look at this, picture this in your mind, 1 minute FEG, and then this 2 candle of consolidation before we hit the buy side. Going back to the 15-second now, right? So this is the consolidation here, this is the FEG at the bottom. We want to be seeing what's our reaction to this consolidation, which previously served as sort of a balanced price range here before we go to higher levels. We bounce originally when we come down here. We don't go to a new high, which if we had, it would have been very key because the run into low day would have made it a lot more difficult, and the run into this liquidity would have been a lot more difficult. But what we see is a bounce that comes down into it. We bounce once again, and now we're wicking and sort of in this area at the very bottom of the consolidation. We test the 1 minute FEG, bounce, test the 1 minute FEG, bounce above these 2 highs, and we come down and sell into that. So what's our specific entry? Our entry is, if we go back to the 1 minute now, and the only reason I pulled up the 15-second is to analyze the specific sell-offs that we saw over the course of those 1 minute candles. This 1 minute candle here was previously very, very green, very large bounce, and then immediately reverses within 15 seconds. Right here, midway through the 1 minute. So let's go to the 1 minute once again, and then just look at the actual structure and the bodies of these candles. That was the candle that we saw fat green, ended fat red. So what happens is they try to bounce it out, and they're rejecting this bounce out of the consolidation, out of this consolidation, and then just general consolidation within this level in this range here. So they're not able to push it above. They push it down into the 1 minute FEG. I'm watching for a break above this wick. If we don't break this wick, and if we're not breaking now these 2 highs, at the very least, we are very weak. And so after I see this candle, we are entering on our shorts. Let me just make sure our specific fills. So we entered a bit late, but we just wanted to make 100% sure that we were going to be getting sort of a breakdown. So we entered after this low is broken. So on this candle right here, we enter when it's a tad green. And then we have fill at 50, and we exit at 20, and we exit at 15. So that was that trade. And it's very quick, as you can see, 1 minute, 2, 3, 4, 5, 6 max. And we're bagging a total of about 30 to 40 points within that little quick 5 to 6 minute range. And at the end of the day, we have a bounce, of course, off the liquidity. But that is the target that they were aiming to hit the entire day, right? So after we saw the sell-off, we should have kept that in the back of our minds, saying that's something that they're going to try to hit. And at the end of the day, if they hit that, they can bounce it. They can do whatever the hell they want. But overall, they're aiming for that zone. And that the time that it kind of popped in my head is right around this sell-off range here. So once we don't hit the low here, once we don't hit the low over here, we know that by the end of the day, any draw on liquidity to buy side is simply going to be serving as an area for shorts to come in. They're taking out the stops, and then for them to hit that eventual target, the large areas of stop loss. And that's just the FOMC lows here. And just a quick peek at ES. ES had actually drawn on this liquidity prior to NQ drawing on that liquidity. So it actually broke at about 236. At the end of the day, it was a lot lower. So we broke this low day here, so 236, and then at 307. And if we go to NQ at those times, we were not yet breaking our low day. So just something to keep in mind, or not yet breaking the liquidity, sorry. Something to keep in mind. Hopefully this helped. I know it was a bit of a long video, but we had a lot of trades today, most of which were at the short levels and just quick scalps that we did today. Hopefully tomorrow's a little bit better in terms of larger point trades, but see you guys tomorrow morning. Hopefully you enjoyed. Peace, y'all.